Well, it's an exciting space because of all the cross-pollination of cultures, first world, third world, specifically in South Africa. So it's a perfect test bed for growing up into the rest of Africa, into emerging markets, or you can, with the cost base of our innovators over here, really leapfrog immediately towards Europe and the US, and we've had examples in our portfolio of both. So we think that creates almost a competitive advantage on the one hand, and the other thing that we think is exciting is really African companies, because of scarcity, have to build for sustainability. So it's none of this pump and dump stuff, none of this overinflation. Most of the companies actually are just building good old sustainable businesses that happen to get a bit of a shot up the arm every now and again for funding, which accelerates that growth. But if that wasn't there, it would eventually kind of get there. So I think it's an interesting narrative, an interesting space to be. I think there are two main gaps, many gaps in this ecosystem, and it is quite fragmented, or in the ecosystems. The two main gaps are really in that 0 to 1, and that seed space. And the gap is not only funding, it's also really mentorship. Entrepreneurs, ideas, one thing, but resources, how to get there, it is really messy. So it's actually quite difficult, and the timelines are long, and there's a whole lot of dominoes that are not stacked up behind the seed stage, so you can't just go and fix that. Series A, and once an entrepreneur's got traction and they really deserve some more growth funding, they can generally find that. But we also then feel that the other gap is we almost don't set our entrepreneurs up for success, because if they do suddenly hit a nerve and start succeeding on a global then we almost don't know what to do with them. Then we like hand it over to, okay, Silicon Valley or Europe, you invest, So Africa's become a massive incubator for international VCs to invest, which is on the one hand fantastic, but on the other hand, we need to support our own innovators from our own backyard. Well, I think by giving the asset class more relevance. So remember, VC and startups and tech investment, all of us here at Africa Arena is for us, it's normal language. But if you take a few steps out of that and think of an investor, of a normal investor that has asset allocation risk, they're going to have bonds and properties and stocks and all that kind of stuff, of which alternative assets is a slither, of which VC and startups and seed is a minutia. So to be able to get people interested in that asset class, we need to give it relevance. And to give it relevance, we need to tell the stories. And the stories around what is being achieved, how these businesses disrupt, and how they actually infiltrate the bigger corporates and how it's going. And yes, one can always look at the Silicon Valley example and how some of those tech entrepreneurs inspire and infiltrate and become major listed companies with massive NAV. But I think it just starts with really telling the stories better. I think we've got a massive opportunity. We have a massive marketing problem in the startup space. Well, I think people sometimes actually also forget that a venture capitalist is a capitalist. So at the end of the day, you make promises to investors, you invest in companies, and you have to get that money back to give it back to become rich type thing, and that's where the exit narrative is sometimes misunderstood. People see it as unpatriotic. Companies that build companies to exit them, are not really in it. Well, what is the point? And those type of things. But I think, so for us, what we've really learned is to say, well, always think exit, and not because you want to really exit necessarily, but interesting things happen to interesting companies. So if you back an amazing African entrepreneur and they do become scalable and they do disrupt and they do start getting that repeatable, scalable business model, software as a service based and recurring, at some point someone's going to want to buy them or collaborate with them or whatever. And too often our entrepreneurs are surprised. We get so many entrepreneurs running to us and said, I can't believe it, but I just got a term sheet signed, or some big corporate wants to do a due diligence with me because they want to partner, and I don't have a data room, and I don't have a one-pager, and I don't have what do I do? We're like, well, it is almost now too late, because they will still maybe buy you, but for a different price, because you now haven't put the last 3 years. So yeah, always work backwards from that moment. Believe that you're going to get there, believe you're going to drink that champagne, think about the previous 6 months of contract negotiation and escrows, think about the previous year of sell-side due diligence and all the rest of it, and think about the previous 4 years, which is now. What the hell do you have to do now to get to that point? Because if you don't believe you're going to get to that point, dear startup, you're not going to get money from Knife Capital.